Hey everyone, welcome back to Corporate Decoder. So, Weatherford International is back with their latest report, and let's just say they're certainly keeping things interesting. Are they navigating choppy waters or sailing towards a brighter horizon? We're about to find out. We're diving into a really important document for Weatherford International PLC, which is basically a public report filed with the US Securities and Exchange Commission, sort of like their quarterly checkup. This particular report, dated the 20th of October 2025, covers some pretty significant financial updates and strategic moves. Right off the bat, on the 21st of October, Weatherford put out a news release about their results for the third quarter, which wrapped up at the end of September. Now, the exact numbers are a little buried, but what we know is they're talking about their financial performance and they're hosting a conference call to discuss it. This is a big deal because it's how they communicate their progress and outlook with investors. Then, on the 20th of October, a day before their financial results were announced, Weatherford dropped another piece of news. They're initiating something called a conditional partial redemption for their 8.625% senior notes that are due in 2030. Now, what does that jargon mean? Simply put, they're planning to pay back a portion of a specific debt early. The amount they're looking to pay back is tied to another financial maneuver they've got going on. A tender offer, they're basically saying they want to reduce some of the money they owe, but it depends on how this tender offer plays out. And when they do pay back this debt, they're not just paying back the original amount. The price will be a little higher, around 102.156% of the amount they're repaying, plus any interest that's built up. The actual date for this redemption is set for the 30th of October 2025. This shows they're actively managing their debt, which can be a good sign for financial health. But wait, there is more. Also on the 21st of October, Weatherford's board of directors made another announcement. They've decided to pay a cash dividend of $0.25 per S-share to their shareholders. This dividend will be paid out on the 4th of December 2025 to anyone who owns shares by the 6th of November. This is a clear signal that the company is generating enough profit to return some money directly to its owners, which investors typically appreciate. And like all these official reports, they wrap up with a list of all the supporting documents. This includes the news release we've been talking about, which as you can see is Exhibit 99.1. They also include this thing called an interactive data file, which is basically a machine-readable version of the report. Now, let's piece this together. Weatherford is clearly busy. They're announcing their quarterly financial results, meaning they should be telling us how much money they made and how much they spent. At the same time, they're making moves to manage their debt by paying back some of their senior notes, and they're also rewarding their shareholders with a dividend. This combination of actions tells a story. On one hand, issuing a dividend suggests confidence in their current financial stability and future earnings. It's a way to attract and retain investors. On the other hand, the partial redemption of their debt signifies a proactive approach to financial management. Reducing debt can lower interest expenses and improve the balance sheet, making the company look more attractive to lenders and investors alike. The key here is how these moves align with their overall strategy. Weatherford is in the oil and gas services sector. This industry can be quite cyclical, meaning it goes through boom and bust period. Companies in this space need to be smart about how they manage their finances, especially when it comes to debt and cash flow. By paying down debt and issuing dividends, Weatherford seems to be aiming for a more stable and shareholder-friendly financial profile. We don't have the deep dive into the exact numbers from the third quarter earnings release here, as we're primarily looking at the announcement rather than the full financial tables themselves in this filing. However, the fact they are announcing a dividend and making debt redemptions suggests that their performance in the third quarter was likely positive enough to support these actions. If they were struggling, they might hold back on dividends or debt repayment. Looking at the broader picture, Weatherford has been going through a transformation, aiming to become a more streamlined and efficient energy services company. These kinds of financial actions, managing debt, returning capital to shareholders, are often part of that strategy, showing they are not just operating but also evolving. The biggest risk for a company like Weatherford is always the volatility of the oil and gas market, global energy prices, geopolitical events, and the pace of the energy transition can all impact demand for their services. However, by actively managing their financial structure, they are building more resilience. The success of managing their debt will depend on the terms of their tender offer and the overall market conditions. So, what's my take on all this? Weatherford appears to be executing on a strategy of financial discipline and shareholder returns. They are showing signs of improved financial health, enough to warrant paying back debt and giving money back to investors. This is generally a positive sign. The crucial element will be their actual third quarter financial performance. which the news release promises to detail. Without those numbers, we can only infer based on these actions. Alright, that's our quick decode of Weatherford's latest report. What's your take on these financial moves? Do you think they're on the right track? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and make sure to subscribe for more corporate deep dives. And don't forget to join our Discord community, linked in the description, for more discussions. Thanks for watching and, well, see you next time.